Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And what a day today was. A lot of data. But it is now July 6th, 2023, and we're just after 5:36 p.m. Central Time. Before I go into everything, I want to remind you of this important event. Our Independence Day sale ends tomorrow. So if I were you and you want to take advantage of half off on any of my research products, being the morning subscriber video and or the full research package that includes that, the combo package where you can get the morning subscriber video and the ETF video, or you take the full subscription package and the ETF. You decide what you want. 50 off, either a 1-year, 1-month subscription. Enjoy Independence Day. I hope to make you independent with some trading ideas here. What about how do you get it? You go to iraepstein.com under the word research. Move your cursor to the top here, give it a click, and you can always call our staff for help if you need it. But it does end tomorrow. I don't know the exact time. Don't be surprised. It could be at any point during the day. Take advantage now. Okay. All right. So let's go to these charts and see what we've got. First, you're not even bouncing. You added a lot of yield today to both the 2, the 10-year. They didn't change. They're staying near the 100 level, the difference. But now we've got the highest yields we've had since the month of March. Are we going to double top up here? Are we going to blast through it and keep going? That's what tomorrow's going to tell you. Tomorrow you get the all-important jobs data. Forget everything else. That 15 minutes when the market comes out is going to be a lightning bolt of time. What made the markets drop like a lead rock today was ADP came out, and instead of the number being 200,000 plus, the low 200s, the number comes out near 497,000 jobs. Wages up for the year 6%. It's a blowout number. And here's the scary part. If you've tracked the two side by side, okay, the ADP number recently has been a little less than the jobs report from what I'm seeing. So I'm going, what are they talking? Are they going to get 500,000 jobs tomorrow? Can you imagine that? So the plug got pulled in everything. And if you looked, you saw how fast the markets got on you. And that's when, if you want to go through these reports, that's up to you. Normally, in all honesty, I don't consider the ADP report a major report. It generally doesn't get even a look-see because it's right in front of the jobs report and with the JOLTS report today, which came in just under 10 million new jobs, but still 9.8 is a monster number. You still have people wanting to hire left and right, and I don't think they're letting people go. How come? If you looked at the unemployment claims today, they went up on the initial claims, 12,000, but then they fell on the continuing claims, 13,000. So in other words, people are getting on the payroll, on the rolls of the unemployment, and 2 weeks later, whatever, number of them are getting off it and they're finding jobs. There's plenty of jobs that need to be filled when you got 9.8 million offerings out there, folks. I'm telling you, be very careful here. What's the unemployment number going to come in like tomorrow, too, is going to be very important. So for the week, you're not even down 1%. This is the part you have to remember. I keep reminding you that on a seasonal basis, that's all I'm talking, seasonal. The typical seasonal, according to Moore Research Center, is the buy in the S&P is tomorrow. The exit is towards the end of the month. In the NASDAQ, you'll get there too. That was a buy in the first of the month. We'll get to that. When you come to the S&P, you can see how the market fell back into the support area here. The pattern is still bullish. You've got higher lows, certainly the higher highs. Where did the market fall to and where is it fighting a battle? You hear me say this to you over and over. The line in the sand is the 18-day moving average of closes. It's from there, when you challenge it, the market decides what's it going to do. And this market has now been challenged. It's holding it. So far, things are still in the bull camp. If the market were to let go here, you could fall wherever that Bollinger Band comes in. Currently, it's around 43.65, but the battleground is crystal clear. It's the 18-day average at the 44.33 level, and you are we going to look back and say, regardless of the jobs report, regardless, remember what I said, make it 400,000, whatever it's going to come in at, that people will look and say on this break, that was the break I should have bought. The market bottomed out on that. Because with the seasonals as strong as they are, that's the probability. You had gotten yourself overbought. You're correcting. Neither number, not true. Still overbought. One of the numbers has a 73 reading. So as long as you have that, you're still overbought in the market. Now, as I said, in the NASDAQ on the 1st is when the seasonal normally kicks in. So that was a few days ago, as we can see right here. Let's get to that. So let's assume you came in on the market. You wouldn't have done it there. You either came in on the 3rd or you came in on this day. So they're both so close to each other. On a basis of people that blindly follow these seasonals, they'll probably mark the 15,370 level is an area that they'll target from there. And the market is back down now. They're in trouble. They're down 145, 150 points. Okay, but where did you hold? You held the 18-day average of closes. I don't like going through these reports, even with seasonals. Seasonals tell me past history. If it were that simple, we'd all be billionaires. Past history is an indicator of what has occurred, and if there's a seasonal with it, money flows into markets. That doesn't mean you have to jump in front of jobs reports and all that. You know the time frame of what you're looking for if it continues to work. In the Dow, well, we got hit pretty hard today. You can see this market is not overbought. It's in the middle of no man's land. It is caught in this sideways action right now. If it gets hit tomorrow, I look for big support to show up from 33,876 to the 100-day average, 33,742. And if the world comes apart, then down to the 33,445 level. I mean, those are the three numbers. I promise you, I'm not telling my clients to go into this report. In the Russell, I said it was the weakest of all the indices. You tell me which one got down to the Bollinger Band, the 100-day average. Come on. It went right where it should have for the support, but the trend is down. So this is the market if you're going to sell. You want to sell the market that's already in a bear trend if you get a bounce in it. You don't want to sell the one just getting there. You can get hurt in that. Then you get to the T-bond market. Now, we had sideways action. And for the longest period of time, I was a broken record right here. And I'm going back just 2 weeks ago. By the way, these videos are all there. So if we can step this thing back, and it will, you'll see, here we go. I kept saying, you're going sideways in the Bollinger Bands. It's from there that the market decides what the next move is going to be. I did not expect the downside breakout. I thought it was really going to try to get through all this and say, the Fed's coming to an end, right? Well, instead, what the market did, it challenged, you can see that, and then it bounced away from the Bollinger Band, bounced away, and this is July 3rd. Now, here's where the problem sets in. First day, you're under the Bollinger Band at the very bottom of the day's range, and you did it again. You got to break out to the downside. It's that simple. Yes, the market can try to rally here. It's oversold as can be, but I think the pros are going to sell this market until you get over this high. I think they're going to say a peak is in place. Yeah, I'm surprised that I'm saying that. In the 5-year note, are we going to embed here? Well, the market is embedded. Just we can't count today because we don't know where we're going to finish tomorrow. Both numbers are under 20. Both are under 20. Both are under 20. Both are under 20. So if you've taken my course, you're not trying to pick a bottom here. You're looking to say to yourself, hard rallies are still going to get sold by the market. Now, when you get a report like tomorrow, it can change everything. You don't know if it's going to be a super strong report or if it's going to be in complete defiance of what the ADP and the JOLTS are saying and going the other way. I'm not bold enough to tell traders to go into those reports using the leverage futures offer. I'll let you do that. I don't do that. When I come to the dollar index, today is the day that you were supposed to come out of longs. What? You tell me you're not embedded. Take my enhanced Bollinger Band course. You're overbought. It's the first challenge of the upper band. I teach when you hit the first number and you've been in an uptrend, which you have been all the way through here. Once you cross that 18-day average, it's over a week ago. Market's been in an uptrend. That's what you're looking for. And in the euro, the objective isn't down here. It's really right here, the 100-day, because it's been finding support between there and the 18-day. If you can get over 109, what is that number? 76, let's call it. You can negate this downtrend. I'm not saying it starts an uptrend, but it could be an interesting day. I think it's going to be wild. I was flirting all day with wanting to put out special updates for my clients to buy the British pound. I thought it was a buy at the 18-day average. It already had an outside day. I don't want to go into the dollar. I'm just going to wait my turn out there. Bitcoin. Okay, so is Bitcoin going to hold on to the embedded reading? So far it is. Until it's lost, as I said yesterday, I think the pros are buying. Now, everything got hit today. You can see that. Let me just walk you back a day here. Everything got hit. Very, very clear. Big outside day down. That's a good picture. Why? Because if you take out the highs of today, Wednesday, on Thursday or Friday, I call that a trap for the bears. You'll go back into the continuation of trying to come up since the bias is up, and you open the door, I think, for 33,006. Let's assume that doesn't happen. Then if this is the end of a market that has been going sideways, you open the door for the 18-day average, especially if you lose the embedded reading. Real pretty chart to watch during the day. Brent versus WTI. Well, the OPEC meeting's coming to an end now. It's basically ended. And what we can see is that they ended by saying by August, they'll have 1.5 million more barrels cut. Russia is going to fall into the fold of listening and doing as it says. This is what they believe. They have problems with Iranian oil, big amounts of it still hitting the market. They're producing about 3 million barrels a day, so they've gone up again. Their big clients are China, Venezuela, and Syria. So as you put that all together, you've got to say, okay, what's left for the Saudis? Because they're giving up market share. What's up there is they don't want to go into a price war, and we don't think Russia can, given the war that it's in. It's one thing when they were fighting with the Saudis and there was no war and they're fighting for market share with them. If you'll recall a couple of years ago, and you went to what, negative $37 a barrel. Remember that? I had people tell me, it can't do it. I said, you're nuts. It can do it. I've seen interest rates where firms had to pay overnight interest that would normally receive interest on client monies. Happened. It's how it works, especially in brokerage. I saw it happen. I know it happened. I'm a guy it happened to. And boom, away you go these other ways. So this all can happen, folks. You never say something can't happen. I traded, was it onions? At the beginning, I'm going back in my career, potatoes, onions, and all. And the bag was worth more money than what was in it. I'm not being funny with it, by the way. I swear to you, I'm not being funny. I learned right then there is no such thing as value. I thought it couldn't go below zero, and that took me training to understand it can go negative. And I still fight with clients for years, tell me something can't go negative. I go, wrong. The value can go negative. It is absolutely, nobody wants it. And then it starts going down. That's what happened with oil. You going to take oil and store it? I don't think so. And everybody's going, I don't want it. I don't want it. It just kept falling in value. Obviously, the guy that had the money, that had the storage, came in at $37, and he's looking where oil is now. He made a fortune. Doesn't go bad. You can store it. Higher highs, lower lows. Don't know what to do with that. You can see WTI is stronger, but overbought. A lot of resistance up here. But what OPEC is trying to do is move you from oversupply to undersupply for the second part of the year and crossing its fingers. I want to make this ultra clear. Crossing its fingers that the recession, wherever they show up, are mild and it doesn't impact oil. That is the demand for oil. That is what they are counting on. We'll see. In gasoline, market keeps fighting here at the 200-day average. See the light gray and the 18. Still very much a market that is looking for direction. I don't think it has one. I think it's caught spinning around the 18-day average inside of these Bollinger Bands. Natural gas fell back. Now, all this hot weather you're hearing about, it's burning up. Did I not tell you this chart didn't look right? Said it's not responding to bull news. Boom, it just literally came apart. UNG did the same thing if you're an ETF trader. And I warned people there, run. And it worked. It was a smart move. They're not all smart that I make, but that was a good one. I want to remind you again, take advantage. This is over tomorrow. Just move your cursor to the top, give a click. You will see the icon will appear. It'll take you where you got to go, or go to iraepstein.com. Research. Good deal for you. Cheaper than McDonald's, as I keep saying, for the drink and everything, and you're going to get 22 videos. I think you're going to get hooked. I'm Ira Epstein. You have a great day.